Saturday, December 7th, 2024, Maneco 64, home of alternative economics and contrarian views. Well, today we're going to look at natural resources or commodities or hard assets, land. I think the sector is being neglected.
We are here to try to explain to you what it is we do here.
We are commodities brokers, William. Now, what are commodities? Commodities are agricultural products, like coffee that you had for breakfast, wheat, which is used to make bread, pork bellies, which is used to make bacon, which you might find in a bacon and lettuce and tomato sandwich. And then there are other commodities like frozen orange juice and gold. Though, of course, gold doesn't grow on trees like oranges. Clear so far?
Yeah.
Good, William.
I think the big money is actually accumulating a lot of natural resources and hard assets, while the general public is focused on AI mania through the NASDAQ. The general public is focused on Bitcoin and cryptocurrencies. The general public is focused on the digital world. And I'm not saying those sectors are not important, but sometimes the boat lists too much to one side. And usually the way to stabilize the boat is to go back to the other side. And sometimes it goes the other way, or the boat can capsize as well. And then, and then it's a mess, right? And I think the other symptom that things are really about natural resources, hard assets, and commodities is the amount of friction and conflict there is in the world. Not just kinetic conflict, but financial conflict, financial wars right now between the US dollar system and the up-and-coming BRICS system. Even President-elect Trump said that if people stop using the fiat or debt-based dollar, that they're going to go, the US is going to go after them, put tariffs, or maybe the US could start invading countries again for not using the dollar, even though Donald Trump says he doesn't want to start any wars, but who knows? And that's what we're going to focus on today, because it's a sector that is pretty much hated right now, and I think it's a big mistake to neglect it. I'm going to refer to a few people who I think are very, very experienced and have been in the investment world for many years, who I respect. But before we start, and we look at some charts as well, through which I'll try to show you how neglected commodities are versus, let's say, the NASDAQ and the S&P. Just wanted to give a shout out to my affiliates in the precious metal space in the US. I'm affiliated with Miles Franklin, whose president and co-founder Andy Schechtman is a good friend and has been on the channel several times. Yes, if you're looking to add on to your gold and silver stack, or if you want to start doing it, or if you want to learn more about it before you start, give them a call and tell them that Mario sent you. All the details are below in the description. Here in the UK, of course, I've been buying gold and silver from Gold Investments for over 20 years, and we've been affiliated as well here on the channel. Yes, it's a family-run business that's been around since 1981. And if you want to find out more about it, or if you want to add on to your stack, or you're thinking about it, give Oliver and Simon Tempo a call. All their details are below in the description as well. So back to commodities and or natural resources, and it's a very cyclical market. That's what the experts always say, and they're right. And why is that? Well, when commodity prices are in the doldrums like they're now, especially relative to financial assets, there's very little capital that flows into that sector. So it's harder to start projects, to try to find minerals or whatever commodity, natural resource, to try to build infrastructure to produce more of it. The prices are not high enough to warrant doing it. And especially now with the cost of living or inflation having gone up, a lot of stuff that's needed to extract wealth or natural resources from the earth becomes not profitable. So there's less and less projects out there. So the supply of these natural resources drop, and then gradually the prices start going up because there's not enough, and then we start seeing capital flowing into the sector. We start seeing new projects. And the thing with commodities and natural resource extraction is that it takes a long time to develop these projects and to actually get the project up and running, to get the minerals or whatever out of the ground. It takes 5-7 years, sometimes more. So it's not something that happens overnight. And we're still very much in the relative to financial assets, pretty much in the phase that we're just starting to see, I think, the cyclical move higher. So it keeps happening. Maybe every 10 years or so, commodities go up and then they start going down, up and down. And the last time we had a real commodity bull market was 2008. And then we had another mini move in 2011. But ever since then, things have been in the doldrums. And before I go further on natural resources and commodities, just wanted to refer to a couple of people. One of them is Zoltan Pozsar, who was an analyst at Credit Suisse, who's worked for the New York Fed. He wrote for Credit Suisse when it was still around back in December 2022, so 2 years ago, War and Commodity Encumbrance. And what he's talking about here is that in this new multipolar world that we have, and we can't really deny we have a multipolar world where the BRICS, under the leadership of Russia and China, are moving, trying to move away or trying to find alternatives, really, to the dollar system. Their system is more based on a real world commodity system, and they're trying to move away from a debt-based system that we've had since 1971 with the dollar. And he talks about the fact that back in 1971, U.S. Treasury Secretary John Connally once said at a conference of G7 finance ministers who were complaining about the dollar, that the dollar was too weak, their currencies had strengthened too much. He said, well, the dollar is our currency, but it's your problem. So what Zoltan Pozsar now says that the new important part of the world economy and trade and finance are real assets or commodities. And yes, and what he says is the BRICS basically saying the commodities are ours. getting the commodities, the rare commodities, is your problem. Saying that to the West. And I think that is why we are seeing so much conflict in the world. And that's why the West and the Anglo-American Empire, and especially the UK, want desperately to have regime change in Russia. It's not that they want to take over Russia. They want to have a leader in Russia that bends over really to the West and gives them the vast amount of commodities and natural resources they have for pennies on the dollar. And I don't think President Putin is ready to do that, and that's why they're going after him. Before I reference another person, just wanted to show you here top countries by natural resource value, and this is from Visual Capitalist, and it's quite recent actually. I think it's from a month or two ago. So Russia here, $75 trillion, US 45 trillion, Saudi Arabia 34, Canada 33, Iran 27 trillion. So you kind of wonder, Iran, right? No wonder we always have in the West, we're always having a go at Iran. I wonder if they didn't have natural resources and they just grew broccoli, if they'd be that important. China 23, Brazil, and Brazil is a special case in my opinion because Brazil is quite divided, a lot like the US, and it's got one foot in the West or US, and the current administration is leaning a lot more to BRICS, but that's a different story. Got Australia, Iraq, and Venezuela. Well, Venezuela, they don't have that much broccoli either. And these numbers could be even bigger. And why do I say that? Well, let's segue into the other person that I think is, that I respect a lot, and that's Catherine Austin Fitts. And I listened to an interview she did with Greg Hunter about a week ago. And she says, smart money buying up real assets, not Bitcoin, Catherine Austin Fitts. And one of her theories about natural resources and commodities is that, for example, the U.S. Geological Survey apparently has done some kind of study about all the minerals and natural resources down to 3,000 feet in North America, the value of that. And that means not just the US, but Canada and Mexico, I assume. And she said it's valued at 300 trillion, which is a lot more than 45 trillion. And that might be so, but that also means that the Russian number is even bigger. It could be more like approaching 1,000 trillion, which is a quadrillion. And it's a quadrillion, of course, is a silly number, but maybe not so much in the financialized world of the city of London and New York, because some people argue that all the over-the-counter derivatives bets on the financial markets, commodity markets, they add up to more than a quadrillion. So, but I think natural resources are a lot more important, of course, than financial bets. And that's what the world is waking up to. At least the BRICS have. And unfortunately, in the West, the general public is totally unaware of how important commodities and natural resources are. If anything, our leaders are telling us that it's bad to have natural resources, that we have to save the planet from destruction because of this net zero, that we have to stop using carbon. And that's giving people all the wrong signals. And that's why I think in the West, investors and the general public, they are relatively asleep and oblivious to how important natural resources really are. I think this religion of net zero and climate change, that's gonna go away very quickly and very soon, in my opinion. I was just reading that the UK government is making a U-turn about alternative energy like wind and solar, because it's not gonna cut it to change it so quickly. So they're moving already more towards nuclear as well. And I think they're going to move a lot more to the old hydrocarbon or fossil fuel, if you want to call it. Eventually, they will have no choice. And I'm not saying that some renewable energy isn't a good thing, but we can't depend on it. So we have to realize that without natural resources, without extracting them, without processing them, we don't have anything. Yeah, look around here in the room that I am in. It's all made up of natural resources. The clothes we wear, the heating in the house, the air conditioning, if you're somewhere very hot. When you drive your car, you need, well, the car is made of minerals. Everything needs minerals, natural resources. Even AI needs a lot of energy. Some people are talking as well, like Pierre Lassonde, that we need a lot of copper, a lot of gold. And going back to Catherine Austin Fitts, one of the things she says about Bitcoin and this new move towards championing Bitcoin by the administration that's going to take over in January, is that she thinks it's just a way of transferring wealth. And she says it's going to be the most massive transfer of wealth in history. And what does she mean by that? Well, she says that you've got all these Bitcoin billionaires who need to really get out of their position. So they need to bring in the general public to bid it up. So these guys can get out of it and pile into commodities, real assets, natural resources. And she gives the example of all the richest people in the world, like Bill Gates and others, who have been buying farmland and who have been doing loads of other things in relationship to commodities. So she says that's where the smart money is going. And I wouldn't put it past Berkshire Hathaway and Warren Buffett to start moving a lot of that $325 billion in cash that they've got into the natural resource space. So I think that's where we are right now. And I have a playlist that I started back in 2019 or early 2020. It's called Commodities Bull Market. And I think we still are in a secular bull market that started in 2020. And as I said, they usually last 10 years, these cycles, or sometimes even maybe 12 years or maybe less. But on average is about 10 years. So I'm going to put a link up here for you for that playlist, Commodities Bull Market, if you want to listen to it. So let's look at some charts then. The first one I'm going to show you is the CRB index, which is the Commodities Research Bureau index of the major commodities. And I told you about the cyclicality of commodities, right? So if you look back to early 1999, commodities were down in the doldrums, and then they picked up, and then they corrected back in 2002. They bottomed again, and then they took off, and they topped in 2008. So it was about just under 10 years from 1999 to 2008 there, that cycle. Yes, it corrected with the great financial crisis, and then it picked up again, and it topped in May of 2011. So it's pretty much like a 10 to 12 year move. And ever since then, though, we've been in the downtrend, yes, we picked up from the low in March or April 2020 when we had the COVID crisis, of course, and they shut the economies. People thought, well, no one's going to need commodities, right? No one's going to be doing anything. So there you go. No one doing anything. You don't need them. But if we're back doing things, we will need them. And then we had a big move higher, and that took about 2 years, and we've been consolidating since then. And I still think we're about to break out. And these things, of course, don't happen overnight, but I think the general trend is that commodities are going to pick up again. Of course, this is a monthly chart. So we're going to go to another chart here. Here I'm comparing the CRB index to the NASDAQ composite index. And as you can see, it was at a bottom in the beginning of the century in 2000, and then it topped versus the NASDAQ in 2008, and it's been a horrible bear market in terms of the NASDAQ ever since. So that's about 16 years. So, and of course, the bottom really actually was in 2020. So it was actually about 12 years. And that's why I think the move we've seen since 2020, where we went up, commodities went up relative to the NASDAQ, and now they've come down, is just like it's a bottom. Just like the CRB there in the last couple of years is like a consolidation. And then you move to the CRB versus the S&P, same kind of trend and move. Here we've got the GDX, the gold miners ETF, versus the S&P, and you can see how heavily undervalued it is versus the S&P. So I think the downside risk is much smaller than the upside potential. Again, that's just my opinion. And then we have here the GDX versus the NASDAQ, same kind of scenario as the previous one. So you're probably asking yourself, and I've spoken about this many times in the last few years, but some of you are new to the channel. How do we position ourselves? How do we protect ourselves financially for this environment of natural resource wars, the undervaluation right now of natural resources, commodities versus the financial market? Well, if you want to find out more, join me on my live stream tomorrow at 9 p.m. London. I'm going to try to have Clive Thompson on as well. He's a retired fund manager, private banker from Switzerland. He knows a lot more than I do in terms of how to diversify and what to look at. And again, this is not going to be financial advice. This is all more like a roadmap for you to find yourself. But the homework and the research, the decisions, they're up to you, not up to me or Clive or anyone else. So with that, I'm going to wish you all a very good weekend. Take care. Bye.